In this video, I show you how to trade divergences the right way. I will give you a lot of tips on how to master divergence trading, what to look for in your charts, and also what to avoid, and what I see many traders do wrong when it comes to divergences. First of all, I'm using the RSI with the 14 period setting. It's a default setting and it works really well for divergences. So at the core of a divergence, when we're talking about divergences, it means that the price action part and the indicator part are not agreeing. They're doing two separate things, and that's a very important signal. In a price action chart, generally what you want to look for is a trending market. Divergences should only be searched for in a trending market. And then on a price action chart, like here in a bullish trend, what you generally see that the market is making higher highs and higher lows. However, the indicator at this point is not agreeing and the indicator is making lower highs. So you can see they're doing two separate things. Why is this so interesting? The RSI is a momentum indicator. It measures how strong the trend is. And there's a reason for why the indicator in this case and in most other divergences is showing you lower highs, whereas the price action is showing you higher highs. First of all, the selling period here, the period where the market went against the ongoing bullish trend, is very strong. When we look at what has happened previously here, we never had such a steep and strong decline. This is a very important finding because in an uptrend, you generally want to see strong buying and weak selling. But here we are seeing for the first time strong selling. At the same time, the distance from this high to this high is very low, whereas previously the market was easily able to make new highs. In this case, from here to here, the price barely made a higher high. So we have weak buying, and then we have strong selling and weak buying. This is why the indicator picks up a divergence. The indicator is recognizing that we have strong selling and weak buying. And so therefore, the indicator is showing you that there's something going on in the charts that you don't see when you just look at the market moving higher. But this is only the first part, and a divergence should never be traded on its own. A lot of traders will lose money when they trade only divergences, but divergences need to be put in the right context. First of all, the most important thing is that you have to search for divergences in a trending market, never in a range market. Also, I would recommend only trade divergences in mature trends, when the trend has been already going on for quite a while. When the trend is just getting started and the new uptrend is just emerging and you see a divergence, that's not a good signal. Look for mature trends. They have a much higher chance of turning around. Also, look at the bigger picture. We can zoom out and what we see is that the market has been going down quite a bit. Here even there was a very strong selling period. This could be news driven, it doesn't matter, but what we see is that we had a strong selling period. Then afterwards, the market overall is giving you a very weak buying period. So the market has been grinding higher, yes, but very slowly. So overall, the market seems to be going down. Also, when we look at the support and resistance structure of this chart, we see there's a huge support area here, and the market is currently trading into this area. So previous support is often turning into resistance. And this chart, if we zoom out, you can see this seems to have a tendency for this behavior. Support is turning into resistance. That's how this market seems to behave. So now you can see we have a much stronger signal than if we would just look at pure divergences. You will find divergences all over the place. However, if you don't have the additional criteria and the additional confluence factors, it doesn't matter and it's not strong enough. I would never recommend trading divergences only with divergences and no other signal around them. Then what we can look for are trend lines or horizontal structures. Here you can see we have a very nice trend line and we have a support level here. What you want to do generally is make sure that you're trading on the opposite side of a structure. Those structures, the moving average, the trend line, and the support level are providing support and the market keeps bouncing off of them. So you don't want to trade when the market is at those areas. This is a strong cluster and there's a high chance, even though we have a divergence, that the market will bounce and trade higher from it. So we need to make sure that the market makes it on the opposite side. So now what you do is waiting. You're not doing anything until the market is breaking below it. We have a very strong selling period. That's good because now we have the second strong selling period. As you can see from the RSI, this drives the RSI almost to the 20 level. Now what we have a lower high. So from this high to here, we have now a significantly lower high. Another very bearish signal. We have a double top here, very, very bearish signal. At this point, still, we are not going to go in the trade. But when the market or if the market breaks below that, that's where we want to go short. That's a very strong signal then. Let's see and wait what the market's doing. And you can see we have a strong breakout candle. This is the key. The stronger the breakout candle, the better the overall signal is. There's a huge power shift going on here in this market, whereas previously we probably had more buyers than sellers. Now you can see the selling periods are increasing and gaining in strength. And this points towards an overall increase in selling pressure. So at this point, it is a good idea to short the market. Stop-wise, you have a nice option here to hide your stop loss and protect your stop loss behind all of this barrier. Just above the support level, above the trend line, or even above the moving average. That depends on the level of aggressiveness. But overall, a really nice market, and there's a high chance that we roll over. Of course, we could also have a retest and retest the structure. We could also see a retest of the moving average and the trend line. Both is possible. Obviously, we don't know in advance, but that's why if you are a breakout trader, you protect your stop loss somewhere behind those structures. And see, we have a little bit of a pushback, and then now if I speed up, let's see what happens. Move lower and lower. Very nice trending action here going on. We unfold to the downside. So you can see the divergence is only the first piece to the puzzle. The divergence tells us that the momentum structure is changing, strong selling, weak buying, and then we have all of the other confluence factors, support and resistance, we have the previous big downtrend, the weak buying here, then we have lower highs, we have great structures that are then broken, and then you can see that trend unfolds. Divergences can manifest in many different ways on your charts, and I will show you a few more examples and a few alternatives. So first of all, we want to start here with the divergence. We have the price making higher highs, and the divergence is here on the indicator. We are making lower highs. So this is a good first finding, and you can use the RSI as a first filter. What else can we see? Let's see, maybe we have a trend line here. We also have a pretty strong signal here. So what this is a reversal. You can see there was a jump. The market first jumped higher, then very strong to the downside, but eventually the market returned to make this divergence. Here it looks like a failed breakout because we can see here's our high, then we made a high, and immediately within 2 candles we are trading below that. So this is a strong rejection that we also have to be aware of. Rejections, fakeouts, as many traders will call them, are strong signals as well. Let's zoom out, and first we can see that we have a strong period of buying. I mentioned it already. The stronger the buying, the higher the likelihood that the market will reverse. Why is that so? Just imagine, as the market goes up, people are buying and buying and buying and buying. And the higher the price goes, the more unrealized profits they have in their trading account. And then eventually those traders, when they have unrealized profits, they will think about taking profits. And for example, probably a lot of traders are looking here at this area. We have the 130 round number, very, very important round number. A lot of traders are probably using that to take profits. That's why you see a lot of increase in volatility. And the more weakness the market is showing, the more of those traders who are still in their profits and still holding their trades have a higher likelihood of then closing the trade. So that's something to also keep in mind. Then let's see when we zoom out what we have. We're trading above a resistance area. So you can see here we have a strong resistance here a little bit lower. But somewhere in this area you can see that 29 seems to be a very, very important area. So you can see right now the market is trading above it, but only the divergence is happening above this area. And this is a very weak signal. This could easily lead to an exhaustion. It could be the market trying to break out and then giving us a greater fake out. We have the small fake out here in the pattern, and we could have the bigger fake out here in this overall picture. The strong resistance, the market tries to break out, and if we don't know yet if this is really going to happen, but if we fall back below this area and if we see signs of weakness, we could be at the starting point of a move back to the downside, or at least somewhere in the range. There are some big levels here in the range, but if this is failing the breakout, then there's a high chance that we will fall back inside the range. So that's also a very good thing to know. So let's see, what can we do? We have some levels here. We have our recent low here, which also coincides with the moving average and the trend line that we are drawing here. Let's just speed up the price action, and see, you can see we broke below it just 2 candles afterwards. So what you want to see is this, a large breakout candle, just like I pointed out in the first example. You want to make sure that the breakout is meaningful. This is a momentum shift where the market is really shifting the gears from uptrend to now a seller dominated market. So at this point, this is your entry candle here if you're trading a breakout. And stop loss wise, again, this is a great way of trading because your stop loss can be really nicely tucked away behind all of those areas. We have the support, moving average, the trend line, and also we have a cluster of highs here. And also the round number 130 is right here. So this is also a strong resistance area. And then you can see what we have. We have the retest, almost coming back to the structure, not all the way to retest. And then the market is moving lower here underneath the moving average, retesting the moving average here. Then you can see breaking above the moving average, going into a little bit of a long-term accumulation. We can just keep going, and this is our previous example. You can see the trend unfolded. We had this sideways phase, a continuation now, and what we see now is another divergence. You can see the RSI started to make higher lows, and the price action is making still lower lows in the downtrend. And you can see that was what I was referring to. This now looks like a fake out. The market fell back below the range and now is traded almost back to the low side of the range. That's why this was such an interesting signal here, with the potential fake out happening and the top side of the range. And then you can see we moved quite low. So now what we're going to do with this? Again, first thing, we have a divergence. Do we have a trend line? Not this one. See, maybe another one. Not always will you get a trend line, but maybe we can work with that. We also have here a support and resistance area. What you can also do is turn on the pivots. You can see for now the weekly pivot is here. The daily pivot is not helpful because we are at the 1 hour chart. We should generally stick to the weekly pivot. So for now we have that. We don't have too much, but we can just keep going and see what the market is doing. And we can see here, again, I was a little bit too slow. You can see the breakout happened here. Let me turn back on the pivot. We are above the pivot. Very often, not always, you will get a retest of the pivot. Sometimes you will get also a retest of the trend line, but you can see in this case, the trend line is pretty far away. So let's just see. But if you're a breakout trader, the breakout above the pivot would be your signal. I would not typically recommend to trade below the pivot if the pivot is so close. It's just a very, very strong resistance. Here again, previously I was highlighting the sideways phase, and the sideways phase here also stopped trading higher at the pivot. So that's why you want to make sure that you're on the right side of the pivot. So let's see what happens. We're moving higher and higher, the market never looks back, and we're unfolding higher. And again, we start here with the divergence at the downside. We are now back to where our previous analysis had the resistance area of this large range, and we are back at it. The 130 is just up there. Remember that we identified it. Let's see what we have. And again, we reach into the resistance area. You can see we have a fake out. Very strong selling is coming back into the market. And in this case, we don't have a typical divergence. We have equal highs on the price. The divergence is definitely showing lower highs because you can see that there's almost no momentum here for the bullish side anymore. Strong selling here that brought the RSI really down. And again, we started here with the divergence, break of the trend line, break of the structure, break of the pivot. The moving average is on our side. And that is how you can then nicely trade those divergences. This is not a classic divergence, but I still wanted to include it because I think we can learn quite a lot. What we see here is that the price action is already making lower highs, and the RSI is making significantly lower highs. This high here on the price action is already here with a low or high of the indicator of 63. So we're making significantly lower highs on the RSI. Why is that so? First of all, we have strong selling, the strongest selling that we have seen here in this uptrend, and we have very weak buying, almost no buying interest, just a little bit. We're not even coming close to the previous high. So that is what the indicator also tells you. Not only divergences are interesting, but also you can look at the different trend waves. And that's basically what the indicator is doing, the RSI in this case. It's analyzing the strength and the length of trend waves. So that's also something to always keep in mind. Then we zoom out. What do we have? We have another area of support and resistance. And it just makes sense, whether you trade divergences or any other thing, it makes sense to add this criteria to your trading. Trade where the market has previously shown a reaction. A lot of traders will have those areas marked on their charts. A lot of traders will watch them, and then it becomes a self-fulfilling prophecy. A lot of traders probably use them for their targets and for their stops and for their positioning, and that's why they often work so well. Then what we also have is a mature trend. The market has been going higher for quite a while. We've been moving up and down in many waves. So again, a lot of traders are probably sitting on a lot of unrealized profits. And as we move into this big resistance area, probably a lot of traders will think about exiting trades, especially if they then see the market is not able to follow through and making a lower high. Then more traders will exit their long positions, and this is all then contributing to more selling pressure. What we can then do now is draw a support zone. We have the 17 round number. Very, very big round number. So you definitely want to make sure that you trade below that. So this would be our potential entry area. We don't go short below before that. So as long as the market is above it, we don't even think about going short. but this would be our barrier for a potential breakout. And again, we have our strong breakout candle. This should be a filter in your trading as well. Only trade breakouts where you have a strong breakout candle. That makes the continuation and the follow through more likely. The RSI keeps making lower highs, obviously, as we have more selling, almost no buying here anymore in this market. Then let's see what happens. We can speed it up. We have the retest of this area. We're not falling back too deep. And let's see, I will speed it up, and we have the continuation in this case downwards. So you can see again break and retest in this case, and we are following through to the downside. This is the first trend wave. We have our consolidation, and then if you want to trade more, you can continue to the downside. If this goes on for too long, you probably want to think about getting out or moving your stop loss at least to protect your unrealized profits. But again, the point here is that in this case, we don't have the classic divergence, but the RSI helped us in the way it is designed to understand what is going on here. Weak buying, strong selling, and that's why the indicator looks the way it does.